Okay, this is another installment in the video series called Romeo CRT 2023 review. I apologize for the audio quality issue in my last video. I like to monitor my audio with headphones, and my headphones were around my neck, which is right next to the microphone, so it caused the doubling effect. So the purpose of this video series is to look at the trades that Romeo has made public in 2023 and to just break down every single one of them. There's a lot of them, and just to explore that style of trading turtle soup or CRT or his market paradigm. And I want to become a better trader. I'm definitely not going to be the best CRT trader. But I think that CRT is such a great system. I mean, you can, even as an average CRT trader, you are head and shoulders above lots of other approaches to reading the candlesticks. Okay. So looking at trade number 9 here is going to be a EURUSD long in February. Let's go to the PowerPoint. February 13th, 2023. So this follows that same structure where you have a pretty large trend and it's terminating into what I would call like an origination candle. And we will see what time frame these candlesticks are, whether it's like the 4-hour or the daily or what, or maybe somewhere in between. And then these candlesticks are on the 2-hour. I went back and I checked using FX Replay. Even though you really can't see any indication from his screenshots, this is a 2-hour time frame. So let's just talk about let's break it down. What are we seeing here? Why does it want to turtle soup this level here? And then why does it distribute so quickly and so reliably to this drawn liquidity? Well, if price was oversold, you form this origination candle, the high of the candle creates a draw on liquidity because there is sell side imbalance and buy side inefficiency right here. So what we're going to do, so this is basically like your internal liquidity play. This is the low of the range, which is like forms the key level, and then this is essentially, this is you if you got in right there, you're if you held on the entire time, it's a pretty inefficient trade as far as time goes, but like that's a great place to get in this particular trade. Not a super reliable way to trade though, because you're literally like pulling the trigger after the distribution. You're not waiting for the cycle to, reset itself. You're not waiting for more accumulation into manipulation. This high here, like if this is a kiss of death, like turtle soup into this level, this is an inducement high, right? Because it kind of dumps and then it ends up rallying past. Like overall, like using classical TA, this is like kind of a microphone or expanding wedge type of deal. So anyways, let's go in and look at, I don't think there's too much to see here. He's got another, what's funny? I didn't even notice. He's so cheeky with these, to use an expression from the UK. I'm not from the UK. I'm from the United States. I'm from New England. But he's very clever sometimes with these emojis because he's got the eye emoji here. And I'm trying to think of, it's a further, so what is he saying with that? Is he saying that you could enter there, or is he saying watch that fair value gap? Yeah, so in other words, maybe he's saying that this is a turtle soup, and that in the turtle soup, rather than maybe take partials at the exact 50% of the range, maybe he's saying that this bearish FVG warrants kind of the what was the term that he used like previously for it? It was like a make or break level. So let's say like the consequent encroachment of this bearish FVG is like a make or break level. In other words, you'll take partials, let the rest run, move your stop to break even. It would have worked great on this trade. This trade moved perfectly within that paradigm of what we're looking for here with this model. So let's go to FX replay. Yeah, so he'd almost, I really think in the way that he made it kind of like light gray there, to me it says major draw on liquidity, minor draw on liquidity, or in other words, take profit 2, which is really your intended take profit based on your original risk reward profile, and then this would be like your initial take profit. Like, in other words, a scalp and a swing trade. FX replay time. So here you have the 2-hour time frame, just as he showed us. I apologize, I didn't like get the exact candle when I set this up, but I've got the draw on liquidity there, and now that I know to look out for it, I'm gonna put in this bearish fair value gap, this little guy there. And there is a symmetry to the way price like this is a CRT. So like last video I was talking about like symmetrical CRTs. Like it's what he's teaching currently on his public YouTube channel. But here, I'll doctor the you guys. I don't even, if you're watching my videos, then you already are godlike expert in CRT, and you're just morbid curiosity is driving you to watch somebody just rambling about it. But yeah, what a symmetrical candle range trade, right? It's candle number 1 is the a large down close candle, right? Like this daily candle. And then candle number 2 is the accumulation, and candle number 3 is distribution. Candle number 2 is I can't even explain it properly because I don't actually trade that way. But this is a prime CRT candle, because this is the candle that gets, if you pick, like that's the hard part about CRT, which just looking for those like symmetrical candles is like cool. Like that's the hard part for me, is like the context gets tough, where like looking at it this way just gives you that immediate context, which is so much more helpful. I mean, I'm a busy guy, and I think I just need more structure, and this provides all that structure. So anyways, what was I saying? So this is the there is a symmetry. So in other words, you get a V bottom there, in terms of like that symmetrical candle, or just the symmetrical way that it takes, the time it takes for the price to get there is symmetrical to the time it takes, is the same as the time the time it takes for price to get there. Okay, so let's do this. Here's the game I always like to play. He's presenting this to us on the 2-hour time frame, which is cool, right? Oh, that's funny. This is I didn't actually expect this to look like this, and that actually is going to help me a little bit too to notice this. So, I often try to draw my like origination candles, is what I've been calling them. So I often try to like look for a candle that like seems, this candle's pretty obvious there, but I'll tell you the issue with this one is it's still too low of a time frame. Let's go to the daily. The daily might be too high of a time frame. Yeah, but it's starting. So like the high of that candle there, And so it's almost like these two candles together make this entire range. But I often try to think to myself, like, at some point, the previous distribution, at some point when it gets too far, or when it's completely, quote unquote, played out, there's a little switch that happens. And then at that point, you get this really awkward candle that forms. And I say that they're awkward because they often look like they have a draw on liquidity on both sides of the candle. And so this one's a great example of it, where you have all this momentum and it closed below this low. And you're thinking, man, that's a ton of momentum. So clearly this low is going to get taken out because of like 1, 2, 3, like bang, 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 like 3 large bearish displacement candles there in the euro. But at the same time, in admitting or observing that this is a draw on liquidity here, this is also a draw on liquidity, because a gigantic fair value gap above, a breaker, order, another breaker. So this high here and this gap jump, right? This high here is very suspect. It's very like, okay, that high. So it's at that point where it's the combination of, like, you could list them out here. Like, what makes a good origination candle? Well, it depends on like what type of setup, but the past two have been like this. So we'll call it, if you're looking for trend into range, then it occurs at the end of, or near the end. You could say starts near the end of a confirmed, already playing out distribution. In other words, like, here, I'll just put end of distribution, or finishes the distribution, completes it, right? Finishes the distribution. So like, why is this the candle that finishes this distribution? Well, you could play the same game that we're playing here. You could play it over here with a bearish turtle soup. Like, you could say, well, here's, and like, it's, if this is 3 candles, well, then this was a 10 candle range, 7 to 12, we'll call it a 7 to 12 candle range, that essentially caused that to form, right? So starting from this one, 1, 2, 3, 4, 5, 6, 7, 8. So yeah, 8, 9. Yeah, 9 candles, or 8 or 9. So technically the 9th candle is like both the peak of manipulation and the start of distribution. That's actually very common. Hard to scalp. I admit I've been, like expecting like this to be the high, and then anyways, I've been caught by situations like that. But this is truly a CRT, obviously, right? But at the same time, if you're looking at it in terms of my model, or not, it's not my model. Can we call it the Romeo 2023 model? Kind of like how people call the ICT 2022 model. Anyways, it's 8 or 9 bars. It's funny how TradingView won't actually count this as the first bar, but it's 9 bars of accumulation into manipulation, and then it's 3. It's 3 candles of distribution. So with the third candle taking out the range low, actually the second candle takes out this range low technically, but I mean, we could be on the wrong time frame, right? I mean, you could say that you could easily say it was 11 without breaking too many rules, right? Could be that range low. But boy, that actually doesn't really quite fit the framework, because it ends up being more of like 3 drives at that point, which doesn't quite fit it. But anyways, call that the, well, yeah, we'll call that the range low. But yeah, so it's, yeah, it finishes the distribution in terms of like maybe the timing, or maybe it's, yeah, actually that's kind of interesting too. I'm noticing this is like, maybe is that another reason why? So the fact that you only needed 2 candles to take out this 10 candle range here, and then you have that third candle forming that's like pushing past into oversold territory, just speaking in terms of like archaic technical analysis terms, and then and then that ends up becoming this trigger for vol selling, accumulation, and then which gets turtle souped, and then it gets it sets up this delivery here into the draw on liquidity, which is kind of this little really cool like counter trend trade. I mean, it might not be counter trend. I mean, looking at this actually might be the continuation play. Let me look. Yeah, so we were set up for it for sure. Yeah, and that high, it's not quite a. Anyways, I'm getting distracted. I get distracted a lot, but yeah. So number one is it finishes the distribution, and that just kind of puts you in the right perspective for finding these. And then it has a draw on liquidity on at both high and low. Another trader I try to follow, I've picked up like lots of tidbits of wisdom, like that, emphasizing LR, emphasizing the equal highs, equal lows type of methodology. He's just invaluable for scalpers as Dodgy. So Dodgy on YouTube, it's like Dodgy DD or something like that. He's a young kid. I think he's like from New York. He's not a kid, but he's younger than me. Anyways, but Dodgy talks about how like if you have draw on liquidity at both highs and lows, like both sell side and buy side, then he won't even trade. Like he's basically saying like, for him, an origination candle, and he'll still trade because these are like higher time frames. So he can find his draws on liquidity within this. It's all fractal, right? But yeah, and that's really smart. I mean, that's like what saves him from just blatantly just buying and selling every inverse IFEG entry that fits his system. But yeah, so this candle ends up having a draw on liquidity on both the sell side and the buy side. I should probably put that buy side and then sell side. And then what else is cool about the origination candle? I mean, I mentioned it looked awkward, but like, what's another like facet of it? Let me go to the 12-hour chart here. Yeah, so that's kind of interesting. So it's not in this turtle soup range. It's not necessarily about the candle, like a singular candle creating the range. It's more about an awareness of when to look for a range to form. And actually, they both kind of coincide on the daily chart. But like, that's interesting too. Is to just think like, at this point, we take 4 of these 12-hour candles here to make one final push, and then that sets the key level, because price immediately starts accumulating after that. Yeah. So yeah, so that's the draw on liquidity there. You know what's funny is you have a pretty similar trade with like this being the draw on liquidity, modifying your time frames a little bit, and then just basically saying that's your awkward origination candle. and then just counting it based on there, which I guess it would more be like an 8-hour candle. Yeah, that one works as well, actually. Yeah, so this one's got me all twisted up in knots, but that's okay. It's more about it. Yeah, the 12. I'm sticking with the 12. Actually, the 12 is actually looking. Oh wow, look at that CRT on the 12-hour. That's really pretty. So yeah. So this has got the bullish turtle soup, and that's gonna kick us off here for this range. But yeah, the only thing left is just to let it play out and look for the ratio breakdown. This is kind of, obviously it's very boring and repetitive, but that's a good thing. Every time I do one of these, I get a little more closer to understanding how best to go about trading one of these. We could do the whole thing where we look for shorter time frame models, but like lower time frame entry models, to me, it's kind of like pick your poison. Like you've got lots of options, and the funny thing about those is if you just rely on those, it's literally pattern trading. Like you could trade like the classic Romeo #1 with like fat down close candle, FEG in the opposing direction. Oh, sorry, I gotta go. I'm actually going to end this video a little bit early. I think I got the majority of my analysis